You're listening to the Insurance Podcast from Insuretech Connect 2024, recorded live in Las Vegas, Nevada. Brought to you by First Insurance Funding, the innovator in payment solutions.
We're back here, ITC 2024, and we're with Matthew Jones, Head of Ventures at Transverse, and struggled with that one a couple times. So, hey, Matthew, great to have you back. First time we sat down here was ITC 2019, pre-COVID. You were on the VC side then. You've done a couple little things in between. Little is an understatement. Thank you for coming back.
Thanks for having me. 5 years went very quickly, didn't it?
Oh, yeah, it has, like crazy. And let's talk about how, what have you experienced over these 5 years? Have you been coming to ITC the whole time?
I have. You can't keep me away.
Yeah.
It's
those flights, eh? They bring you guys over. Yeah. We can't stop them.
It's the highlight of the year. You got Christmas, Thanksgiving, ITC. It's like that's the Holy Trinity, right?
Yeah. Exactly. We said that this morning. We're like, as of tomorrow, we're training for next year's ITC.
Oh, absolutely. Yeah. I've got to book my hotel next week
exactly.
for next year.
So what have you seen? What differences are you seeing here? Before we dive into what you're up to.
Yep.
What are you seeing different here? I mean, as a veteran of this event, you've watched it unfold. What are some of the differences when you walk around and you chat with people?
So, I guess to start with, the context for this event is, a pretty tricky last couple of years for startups in this space, right? So we all read the same reports, the Gallagher Re report, which is excellent, by Andrew Johnston, and the data that's shared by FT Partners as well. We've all seen the same chart, which shows the amount of funding that was coming into the space went up and up and up, and then the last couple of years it's come down pretty drastically. And I think the space really struggled at first to adapt to that new reality. I think it was the first time that a lot of founders and management teams had encountered that kind of change in dynamic. And so they had to spend a lot of time reconciling with the dollars aren't flowing as much as they were previously. So, what I see now is, I guess to start with, a lot more rationality around.
Well, and that's not a bad thing.
It's absolutely not a bad thing, right?
No Bengal tigers. No chimpanzees to pat. And, you're not getting a balloon ride in the middle of the conference anymore, which is too bad. We missed that.
Yeah, but you might say that it's a healthier space now, right? And I think the way that the space, more technology, kind of generally works, and venture-backed technology works, is that companies will get started, there will be a new idea, and they will some will succeed, some will not succeed, and there may be soft landings for those folks, maybe in other cases less soft, shall we say. But so that's really the context, right? The money came in and then the money disappeared very, very quickly. I think if you look around the event over the last few days, there have been a couple of big changes. So on the investor side, a lot of the my old friends in Silicon Valley are no longer here anymore, right? There's definitely been a decrease in appetite from Valley-based firms. One quote that I remember is, if I took an insurance investment to my investment committee, they'd kill me. That summarizes the kind of sentiment around insurance, because a lot of people got burnt. Yeah. So that's on that side of things. On the startup side of things, the one thing I would say I've been very pleasantly surprised about here is the range of just new ideas. I think I was saying this to a friend this morning, that there's definitely an increase in activity. I'm not saying that's necessarily investment activity today, but new ideas, new startups, new partnerships definitely seem to be on the rise, and I think that's overall a really, really good thing. And if I compare it to last year, it was a little bit quieter, a little bit more sober.
Yeah. Well, okay, so Matthew, in between our first meeting with you 5 years ago, you sort of left the VC side and actually went to the Insuretech side. So you were the CFO for Cowbell.
So I was the chief strategy officer at Cowbell.
Cowbell.
Yeah. Sorry. So Cowbell's one of the few scaled cyber players in the market.
Yeah, I had them on the show.
Yeah, we've had Jack a couple times.
And for me, that was an incredible experience. So if I think back to the end of my time at Anthemis, and conversations I was having with good friends, mentors in this industry, the one bit of advice I was getting over and over again was, if you want to be a good investor, go and be on the operating side for a little bit. And I was kind of, when I first started thinking about that, I was like, but I really love investing, and that's what I really wanted to do. But I thought, actually, you know what, this would be the right thing to do. And so had a great couple of years at Cowbell. Was very privileged to be part of the team there. So there I was working on a range of different things. So figuring out our international expansion strategy we were launching in the UK, figuring out our roadmap around new products, around alternative capital and how that we could bring that to support our reinsurance arrangements. But then I came back. I couldn't help myself, so here I am after 6 months at Transverse.
But at the same time, I mean, you really use a lot of the tools. What you just described is a lot of the tools that you had in your toolbox, but you were able to sort of apply it to one organization that was going through this exponential growth. They're a major disruptor. I mean, they're underwriting cyber different than a lot of other carriers in the market. They're growing outside of just, say, the United States. And they're doing it well. So clearly, you must have been a big asset to that. How do you now take that experience you had there and apply that to what you're doing today? Maybe are you a little more critical, or are you, like some people say, I got war wounds now, or scars. Is there some of that, How hard are they on you? Yeah, exactly.
So there are bruises. So there are a couple of different ways that I would say I'm able to draw upon that experience. So the first thing is, if I think about now going into a diligence process as an investor on the other side of that operating experience, you always think as an investor that you know what's going on inside these companies. I'll tell you right now, that is not the case. And so what I have learned is really the right questions to ask when you're doing diligence on a company. Understanding that, in what is typically a compressed time frame, what are the rocks that you should be turning over in order to get to the bottom of what's really happening inside that business. And then the other piece is being a better board member and investor once you've made the investment. So understanding, what is a reasonable expectation of a management team? What is a reasonable expectation around how fast a business should be changing direction? What are the levers inside that company? How many hours get spent on those board decks? And I know that there are going to be founders that are listening right now going, yes, I recognize that. So it's really about, with 2 years of that additional context under my belt, I would say that it's night and day in terms of what I'm able to actually do with an investment process, but also in terms of being a helpful, board member and investor.
So let's talk about investing and funding insuretechs. What's different now when you look at things in 2024 as opposed to 2019? What are the things that where people want to put the money are looking for that's evolved, and maybe that's increasing the chance of success, so to speak?
So I would say that the big difference that immediately comes to mind is 5 years ago, there was definitely a bias towards tell me, don't show me what you're going to do. Now it's very much show me what you've done, and that is the basis upon which I will make an investment decision. And so there is a lot of suspension of belief and disbelief around certain investment propositions. Unless you are a very, very, very early stage business that is really an idea raising money for the first time, you can no longer get away with saying to investors, we are going to do this. You really have to demonstrate that you've executed against a plan. And I think, if we go back 5 years, I think in a lot of cases, people kind of thought of business plans, financial plans as whatever. And now people are really looking very carefully at exactly what is achievable in this business, and are being far harsher on those plans. So that's really the first thing I've observed. If you look at kind of some of the other trends that have kind of taken place over the last kind of couple of years, and also in particular, specialty is definitely a very, very hot space. You guys know that very well. And I think it's been really interesting over the last couple of days, the number of startups that are trying to position themselves as specialty, and you kind of sit there thinking, is this really specialty? Is that really what we're doing here, or do we just want to be the next Kinsale? And so that's another dynamic that's happening. So maybe to put that last point another way, people are trying to understand what drives value creation in the insurance industry, what is valuable in the insurance industry, how do we get on board with that?
I think duplicity, that's the word we like to use. We see that, right, is that you've got versions of similar ideas. AI last year here at ITC became a big topic. We've overused the word a ton, but a lot of people came into the space with that kind of in mind. But that being said, there's various versions of things that are being, even though there's similarities to it, there's still versions that someone has that's slightly different, and it's still exciting to walk through this trade show. This year it's like 10,000 attendees. We heard. We also had the workers' comp thing going on next door, and and I think that brought some people over.
Yep.
The K booths, we call them, where you're really getting a chance to talk directly to a coder or a founder who's done something, and they maybe haven't hit the money yet because they don't have the big fancy booth, and they're just at that stage. Like that, in addition to the fact that they're not really trying to maybe disrupt the way insurance is sold directly from a carrier through an agent broker to the consumer, but rather they're trying now to improve the process. Where, going back, like Pete said 5 years ago, we thought, no, the process is terrible. We need to just get rid of everything and sell insurance in a completely different way. I mean, how many times did we use the Uber analogy, right? And applied it to insurance, or travel agents and applied it to insurance. Where today we walk through and we see some really cool ideas coming out. And as insurance guys that have been in this for a while, we right away go, that's neat. Like that just kind of, you can narrow that down and you can slide that into a company and not really change a whole lot of things, but improve a process really quickly. So now take that and you say, well, how do you monetize that? Like how does VC or private equity take that one wedge of the industry and turn it into a viable investment? Is that a little harder?
So I think in certain cases it's harder, in other cases less so. I mean, if we take a step back a second, I think the way that the phrase that you use there is such an interesting one, trade show, because I would say that a few years ago, maybe even when we last got together, I would probably not have used that phrase. I think it's probably the perfect way to describe what we're participating in today, especially with the number of vendors in the expo hall, and that walking through there yesterday, getting lost a couple of times yesterday. That's true. So that is a really kind of interesting kind of development. I think, from the carrier's perspective, I think carriers can definitely be forgiven for being overwhelmed at the sheer number of these kind of point solutions that you see out there, and one of the kind of propositions that is part of what we do. So, put another way, like the reason that other insurance companies invest in our fund is that we help them to sift through what is happening in the space. We help to direct people to, these are the guys that you should be working with. These are the guys that you absolutely should not be working with, because we know that they've kind of,
it's vaporware.
Exactly. And so there's a hell of a lot going on now. If you think about kind of venture's got a really interesting role in helping to incubate some of these ideas and helping get them to scale. And then to your point about private equity, I think there's a really interesting opportunity a little bit further down the line to start bringing together some of these solutions into a single platform.
Combined,
and it's gradually happening, but I think it's going to take a little bit more time.
Well, no, I want to get into where we're seeing private equity. There's a fund up in Canada now. It's based out of Montreal. They have invested in some key insuretech startups in Canada. One, Foxquill, which actually works in the United States as well. Their big drive and what they are betting a lot of money on is embedded insurance. And this is now a topic that's coming up more and more. And what does that really look like? Is this something that's on your radar when you're looking at entities who are trying to find this way of tapping into a new market area, right? An accessible market that is traditionally not been served well by insurance.
So when I joined the team at Transverse 6 months ago, one of the biggest tasks that I had at the very beginning was to define to articulate what are we interested in, where do we want to be spending time, and through that process I spent a lot of time with insurance companies, brokers, other kind of participants in the value chain to really try and understand where the attention was, where the pain points were. Between us and the listeners, I did not expect that 5 years after we last got together, I would see embedded as a topic that was on the, but it is.
Yes.
And I am genuinely surprised and pretty excited about the fact that so many people are still talking about that topic, where I think I've been pleasantly surprised as well, and especially after doing the kind of VC office hours yesterday in the expo hall, the opportunity for embedded life and kind of health-related products has been particularly interesting as well. So I'm definitely surprised that it is still around as a topic. It's clearly not something that we've finished yet, and it's clearly still got quite a way to go.
It does. I mean, but with life and health and travel accident stuff, we're seeing it more and more, particularly in the areas of when you buy a plane ticket, right? When you fly, you have opportunities. Oh, now you've got an opportunity for a rental car with the insurance embedded into the price as well. It seems it's quietly found a place, but it doesn't seem like it's been something that's upset the apple cart when it comes to traditional distribution models. And that's what I'm curious about. Is there do you think there's an appetite to invest in something that becomes kind of that holy grail model that really changes the way embedded insurance works? Because right now, I don't think it's changed that much from what we're conditioned to.
So I think that's a good, I would agree with that, I think that's a good point. I mean, if I think back 10 years ago to when I was at Swiss Re, we were always thinking about kind of what was that Uber moment that could turn up. And I think for a while, people put embedded in that category. That could be the thing that upends the entire industry. And it really hasn't been the case. I think what a lot of people that are new to the industry forget is that affinity is, which maybe what we used to call embedded, has been around for years.
Yeah.
Exactly.
And so what we've seen is maybe a strengthening of what we used to call affinity, but it's not turned around, it's not kind of, as I said, upended the entire industry. And I don't expect that it will. I mean, my view is that, it will remain the preserve of, a handful of products that are particularly suited to that context-specific offer. But we will see. And, there's still plenty of time for it to play out.
Sort of in addition to embedded, what we see often too is this that use of technology, use of big data to almost start to launch new types of products or existing products with a twist to it, because now the underwriting's a little better. We can get very granular at a high level and dig down really quick. AI, as we mentioned before, is allowing us to do that in the industry. How are you seeing that at your end on a VC side, where people are bringing a product and it's, forget about the tech, it's an absolutely new insurance product, something that people haven't bought before. And sometimes, like Pete said, it's being sold in an embedded model, maybe because that's just the easier way to do it. But how's that been for you on your side, actually finding new products to the industry?
So some of the most exciting first calls that you have as a venture investor in this space are those brand new product ideas, things that you've never thought of, right? And those are the meetings that I absolutely love. And for anyone that might be listening and working on something like that, get in touch, because I will happily have a chat with you about that. So, for example, when I was at Anthemis, we were investing in, a broad range of companies that were tackling new and emerging risks. And, the kind of guiding principle that stuck with me is this idea of, which was coined by Swiss Re, this idea of the protection gap, right? Where do we have this big difference between where protection levels are today and where they should be? And often the trick, the kind of secret to closing some of those protection gaps is devising new products that people haven't thought about. Now, the tricky next step then is, how do you bring them to market?
Bring it to market,
and the
adoption.
Exactly. And the insurance company that we are housed within, Transverse, is a specialist in providing fronting services. And so what those guys are doing is working with a whole range of players in the space, MGAs in the space, that are trying to do exactly what you've just described.
Oh, interesting.
Yeah.
So, Matthew, let's just kind of get into a bit of a wrap-up here. Is there anything you can kind of share that you've seen so far at ITC that's kind of piqued your interest, of maybe trends or companies that you say, hey, this is exciting, and can you name some, or is that kind of the secret sauce that you come back away and go, yeah, you're never going to get that out of me?
Absolutely not. The hard bit is not coming up with ideas as to kind of what's interesting. The hard bit is the execution, and that's what the founders and the teams that are out there in the expo hall are actually doing, and they deserve all of the plaudits for that. So, I was talking yesterday with a friend about, I think there's a real opportunity for new solutions that are targeted to brokers and distribution. And so, example I shared yesterday is, I think, a few years ago, when people realized that selling carrier solutions or solutions to carriers was really, really hard, they then pivoted to brokers and threw the same solution at them and hoped for the best. And I think what people have realized is, actually, for a start, brokers are going nowhere. They remain the gateway to the insurance industry, and they need kind of a different type of proposition. And so in the expo hall, I've been very interested and kind of intrigued by the range of businesses that are targeted themselves specifically at insurance intermediaries. So that's been very interesting, not just on the P&C side, but on the life and health side as well. Definitely seen a good handful of new product ideas, spaces like agriculture, for example, and again in life and health. Been very impressed with what's happening there. The other thing that I would say is it's reminded me of how great it is to be in person, and just to come back to what we were saying at the very beginning. I've been having conversations with founders over the last few weeks, and the opportunity to kind of sit down for a coffee, together and chat through what they're doing and get into some of the problems has been brilliant.
Yeah. Hey, Matthew, thanks so much for sitting down with us. Great to see you again after 5 years. Hopefully we won't make
Let's not leave it as long next time. Absolutely.
Exactly. Hey, have a great rest of your time at ITC, and we look forward to catching up in the future.
Thanks, guys. Good to see you.
Thank you.
Perfect.